Alright everybody, so it's very important that you understand some of the prints that we have had very close to the close as at the first trading session for October 2018, which also welcomes in the final quarter for the calendar year of 2018. Here collectively across the markets, as at the close today, we have seen a number of very troublesome candlesticks. Yes, I understand that the Dow Jones Industrial Average did close up triple digits. However, what we are beginning to see again with these candlesticks are concerning. So it is very important that you follow along and listen to what it is I have to say as at the close on Monday. First of all, here is the chart of the Nasdaq. Today we have established yet again another bearish candlestick. This is what we call a bearish counter attack. It doesn't matter how many points we closed down, or if it were in the other case, how many points we closed up. This is a long day type of Morobozu candlestick after the original gap up on Monday, which closed down, or at least traded down and closed very close to the actual closing price on Friday. We printed below that. We closed down just over 9 points. This is a very bearish candlestick once again on the Nasdaq. What you can do, a very simple exercise as at the close on Monday, is ask yourself the question, do we have market confirmation one direction or another? And the answer to that is simply no, we don't. Not at the moment. I understand, again, the sentiment is quite bullish. Markets popped on the back of that NAFTA trade deal that occurred late last night, but the gains that were established very early on in today's session were unable to be held, and as such, it was more or less a tale of two sides. It was that of a selling wave really from midday onwards. Now, has the Nasdaq pushed above 8,137? No, it hasn't. Okay, it's still yet to do so. If we move into the Dow Jones Industrial Average, this was the major beneficiary of our three closely followed markets today. However, ask yourself the question, what is this candlestick just here? All right, that's meant to be a question mark, but I'm asking you, what is this candlestick just here? And the answer to that question, if I can zoom on into the detail, is that of a shooting star type of candlestick. Once again, we do have that upper wick. The candle is different to the bearish counterattack that we did print today on the Nasdaq. And what we are still unable to do, and this is just a matter of fact at the moment, is simply push on up and close above 26,817. It was looking very bullish during the session when we did see that of a long white Morobozu candlestick after the gap on Friday to begin this week's session. However, once again, the gains were unable to be held. We saw selling come back into the market for the second half on the Dow Jones Industrial Average. We were unable to push above this candlestick over here. This was on the 21st, all right? And as such, it looks as though this may be that of a false break to the upside based on that of the bull flag continuation. If we do not see, all right, more or less immediately after we fill this gap just here, okay, if we do not see white candlesticks come into the market, legitimate white candlesticks that are really going to propel these markets higher, these are warning signals right in front of your face as at today's session on Monday, all right? Some major reversal type candlesticks being printed during today's session. Now, again, I am going to go into the Russell. Major news on the Russell, okay? If you haven't already opened this chart or had a look at this chart, I encourage you to do so. I am going to navigate into the Russell after the S&P 500. So again, today on the S&P, what essentially we did was we printed that of a high wave spinning top candle. You can see we have quite a pronounced upper and also lower wick with a very slight, very small real body to the candlestick. Again, this is just showing extreme confusion in the market short term. We do not have that definitive direction. And I can ask you again very simply, do we have confirmation of the S&P 500 breaking above 2,942? The answer to that question is no, we don't. So all three of these markets still, as at the close on Monday, have been printing in, or at least pricing in, pseudo reversal candlesticks to a lesser extent on the S&P 500, but certainly on the Dow Jones Industrial Average and also the Nasdaq. If we do not see legitimate white candles really show up Tuesday, Wednesday, or Thursday, if we continue to see even bearish candlesticks, it is opening the door for potential weakness on these markets, and it may actually instigate the first true wave of intermediate selling pressure that we have been a little bit cautious about, throughout the entirety of this stagnant market in September last month. Also, let's transition into the Russell. The Russell today, I mean, it goes without saying, just have a look at this chart. What was I talking about in that weekend market overview, and what have I been speaking about in terms of these markets successfully, right, holding these rising bullish trend lines that have been in effect for really the majority of 2018? Well, as at the print, today, as at Monday, closing down very close to 23 points, but this is a long day engulfing Morobozu candlestick. It's going to be interesting to get the closing print on volume, but this is a long day candle. It looks to me as though we've now definitively cracked below this rising area of support, and potentially this might be a leading indicator for what the Nasdaq is going to achieve over the coming, potentially couple of days, if not couple of weeks. Okay, so some major news right here on the Russell. Not only have we not been able to hold this old resistance as new support, I spoke about this candlestick just here on rising volume right here. On rising volume, it was looking a little bit shaky at best. Well, today it looks as though we've got that definitive crack below that rising trend area. Just pay attention. Generally what happens is we will get a bounce that will come on back up and either retest, right, this rising area of support as new resistance, or it'll come back up to this horizontal area over here. So again, pay very close attention to some of these fringe markets. Again, the Russell takes into consideration 2,000 smaller sort of micro cap stocks. And again, this is when we talk about broad market weakness or strength, this really best encompasses exactly that type of indication that we look for when it comes to uniformity, or at least synchronicity, in markets breaking out to new all-time highs and confirming one another. We're simply not getting the confirmation in the Russell 2000, and this may be a leading indicator, unfortunately, for these other three equity indices that I've just talked about only moments ago. Now, if I bring up the final market today, this is the transportational average. Generally, we look at the transportational average very close to it. We compare it against its counterpart, that of the industrial average. Again, we have a little bit of a high wave spinning top candle. All right, not the biggest of signals. It probably is the weakest of signals out of all of the markets that we've actually looked at today. It would have been more compelling and more interesting if we had a lower sort of wick on this candle. But again, this is looking like some form of very short-term sort of intermediate reversal being priced into the transportational average at the moment. Again, all of this sort of concern at the moment is going to go out the window if we can collectively break above all of these swing highs that I've already spoken about, and you can see on my triggers here. But these are here, these criteria are here for a reason, and they're to stop us and to stop you from jumping into a bunch of bullish trades prior to the market actually confirming higher. It would be an absolute disaster if you find yourself jumping into, or at least navigating into, a bunch of bullish positions prior to potentially something like this happening. That's not what you want to do. As any form of technical swing trader or short-term trader, all right, it's simply not what you want to do. And the best way to alleviate that is to wait for confirmation one direction or another. The Nasdaq still hasn't confirmed above its swing high at 8,137, nor has it broken down below 7,849. But to me, it looks as though we are once again going to retest this rising area of support, this trend line. And if this trend line goes, it's going to be the first critical area of support on the Nasdaq, on the Dow, and the S&P 500 that are going to give us future signals for potentially what the month of October may turn into. All right, so having, of course, that we don't have, or at least have achieved sort of confirmation on the markets, there's no point jumping into a bunch of any of our individual trades. It's more so the market overview continuation, and then what will happen later in the week, who knows, maybe even by Wednesday, what it's going to look like when it comes to individual trades. But again, stay focused, be disciplined, stay hungry, but at the same time, pay attention, of course, to these candlesticks when they form. They are telling us something. They are unlocking a little bit of market sentiment, the true sentiment of active market participants. And as at the close today, boy, it doesn't really look all that good. This can change, obviously, but if it is to change, hopefully we will see these bullish candlesticks on Tuesday and Wednesday that are going to offset and largely negate a lot of these bearish candlesticks that we have just printed as at the close on Monday. All right, so that's going to do us as at this Monday afternoon market recap. If you have any questions, email me, success@pivotpoint-trading.com. Until next time, all the best, traders and friends all around the world. It's James signing off on behalf of Pivot Point Trading. Farewell.